Hey everyone, this is Stan Gendlin with RealEstateSkills.com, and in this video we're going to be talking about how to invest in rental property in 2024. If you like what you hear, hit the like button, subscribe, comment down below what else you want us to talk about, and make sure to check the link in the description to get our free resource on investing in rental property in 2024. In this video, we're going to go through the 8 steps of buying your rental property. For step 1, you want to make a plan on what properties to buy and how you want to achieve your goals by buying rental real estate. Number 2, you want to pick a market to figure out where exactly you want to buy. Number 3, you want to assemble your real estate rental team, property managers, inspectors, and everyone else. And number 4, you want to look for financing so you'll be ready when you find a good deal so you can close on it quickly. Number 5, we'll talk about finding real estate properties that actually fit what you're looking for and make sure they hit your goals. Number 6, we'll talk about how to analyze those properties to make sure you know what to offer and if they're a good deal. Number 7, we'll talk about putting them under contract, negotiating those deals to make sure you get the property at the price that works for you. And finally, number 8, we'll talk about getting it to the closing table, closing on that property, and managing it going forward. First, let's talk about making a plan to get into rental real estate. Typically, when I talk to people about building a rental portfolio, I always tell them to start with the end in mind. So whether your goal is to make $1,000 a month passively so you can pay some of your bills, or $5,000 a month to pay a lot of your bills, you want to start with the end in mind. A good way of looking at rental real estate is figuring out how much income will you get by buying a single property in your area. In my area, for instance, it's about $300 a month. So if my goal was to make $1,000 a month in passive income, I would need a little over 3 properties to hit that goal. Next, if each property produces $500 per month, to get $5,000, you'll need 10 properties. And if based on your income and savings, you can buy 2 rental properties a year, it will take you 5 years to hit that goal. So I always tell people when making a plan, start with the end in mind, and understanding how much money you need to buy a single rental to help you hit that goal. And then start putting that money aside or raising that money from investors to allow you to start buying those properties right away. Now that you've figured out what your end goal is for building a rental portfolio, figure out where you want to invest. If you live in an area with not a lot of homes that's maybe very rural, you might want to pick the closest city or just another city where you can find good rental opportunities. Pretty much in every city around the country, there are good rental opportunities. So you should pick a city that you feel comfortable with, you have good connections, or that you research and you think that's a place where you want to own rental real estate. When people ask me about where to buy rental properties and where to own them, my response is follow the jobs. So when I decided to move to South Carolina and start my real estate investing career on my own, I basically went to Google and just searched where are the jobs coming in America. And South Carolina was one of the top places at the time, so I picked South Carolina as my destination. So if you're choosing a market to invest in that's not your backyard, I recommend you pick a market where there's a lot of jobs and economic growth happening. Now that you've decided what your plan of action is going to be and where you're going to invest, it's time to build your team. First, you're going to need a good real estate agent to help you secure good properties that are either listed for sale or coming up for sale that they find for you if you're not going to market directly to sellers. Next, you want to make sure you have a good lender that can help you get loans closed and get those properties to the finish line so you can start building your rental portfolio. Then you should line up a good inspector to make sure you're not getting into any bad properties with some hidden issues. You should have a contractor lined up to get that property ready for rental, to have tenants come in and start paying you rent right away. And lastly, make sure you talk to several property managers so when you close on the property and get it ready for rent, they can lease it up for you, collect the rent, do all the maintenance, and you can have a worry-free rental portfolio. Now that you're ready to buy some rental real estate, make sure you secure some financing before you make offers. If you're working with an agent, ask them about their preferred lenders who can help you close on these loans. And there are several types of lenders out there that specifically work with rental properties and can get you great loans to minimize how much money you have to bring to the table. So you want to make sure you lock yourself in to a long-term loan with a rate that won't fluctuate so much. So if you buy a property with a loan that's cash flowing because of the interest rate you got, it's not going to change too much if interest rates go up anymore, and you still will be able to cash flow for the duration of that loan. Now that you've talked to several lenders and have qualified for a loan, it's time to start going to look for properties. Talk to different agents on the market and tell them what you're looking for. Let different agents bring you leads, and you can pick and analyze these properties to see which fits your portfolio. Now that you have deals coming your way, you want to analyze those deals. Typically want to buy rental properties that are cash flowing from the day you buy them. Or if you're buying a property that needs a lot of work, you want to understand how much money you're going to have to put into that property and how much rent is it going to yield. You have to figure out how much your monthly mortgage payment is going to be, how much your insurance is going to be, your taxes, put away some money for maintenance, and make sure you're having a couple of $100s per month in profit that you can put away in case of any additional repairs or anything comes up. You typically don't want to buy properties that are losing money. Hopefully, one day they will make you money. You want to make sure after you renovate and rent properties and pay your mortgage that the property will actually produce positive cash flow. You don't want to get into properties that are losing money or breaking even. There's no point to renovate a property, rent it, and deal with all the hassles if it's not going to make you any money. It might be better if you just end up selling it and moving that money to a positive cash flow property. In line with making sure you have positive cash flow, when considering buying a rental property, you want to make sure you have a good inspection during your due diligence period. And if anything comes up after you've already secured a contract with a number that makes sense for you, it's totally okay to ask the seller to make any repairs, or if they don't want to or don't have the money, have them offer you a credit so you can do those repairs after closing and not have to pay any more money. You want to make sure you offer no more than the bank is willing to give you, because you want to make sure after you pay that mortgage payment, the property will positively cash flow. So you should just offer whatever makes sense based on the loan that you're approved for. Whether it's a high interest or a lower interest, you want to make positive cash flow at the end of the day, and your offer has to reflect it. And also, when working with a lender to buy rental properties, you want to make sure your offer has a realistic time frame. Most loans at minimum take 30 days to close when working with traditional lenders, unless you're working with a hard money lender, which can usually close in 1 to 2 weeks. And if you're going to secure financing from a traditional lender on a stabilized rental property, make sure you give a realistic timeline on how much time you need to close on this loan. A regular loan takes about 30 to 45 days, so you don't want to tell the agent or the seller you're going to close in 30 days and then ruin that relationship by promising a timeline that's not realistic. Once you have the property under contract, make sure you get a good and thorough inspection to catch anything that the property might have. A lot of times the sellers might not be hiding anything, they just haven't crawled under the house since they've owned it. And that's okay, that's why you hire the inspector. Once you get your inspection back, make sure you have a good agent that can read it with you and ask for the right things to either be repaired or you get a good credit so you don't end up with a huge renovation budget that maybe you didn't plan for. The inspector is one of the most important members of your team, and they can help you avoid buying any houses that will cost you way more than you think and end up losing you a lot of money. Once you've negotiated your property, put it under contract, it's time to bring it to the closing table. Make sure you have a good relationship with an escrow title or a closing attorney to help guide you through the loan process, to understand what your monthly payments are, that there's no hidden fees, that your interest rate won't change. This is a crucial member of your team to help you bring everything to a close. Once you have closed on this deal, it's time to hand it over to your property manager. Your property manager should already tell you before you buy the property how much rent you're going to achieve and what are the repairs you have to do to achieve that rent. You want to make sure you understand all of their fees. Usually a property manager will charge you either a percentage of rent collected or a flat fee. On top of that, they might charge you a lease-up fee, renewal fees, and some other administrative fees. So you want to make sure after all those fees that you actually are making positive cash flow. And a lot of times, different property managers will pay you the rent collected at different periods of the month. So you want to make sure you get your rent before your mortgage is due if you're relying on that rent to pay your mortgage. In conclusion, those are the 8 most important steps when deciding to buy and build a rental portfolio. Remember, start with the end goal in mind. And for more detail, check out the link in the description to get our free resource on how to invest in rental property. If you like this video, like, subscribe, comment what else you want to hear about, and happy investing.